Forex. I'm LA Little, and this is your daily TA wrap, where we take a look at these markets from a neoclassical perspective and we ask ourselves what happened today and does it tell us anything about tomorrow. I do this show 4 times a week. I do it Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, the more we go sideways, right, the more this market hangs, which is what it's doing. The greater the potential that what we're going to see is, instead of a correction, we're simply going to see some sort of a consolidation and then this thing take off again. And so far, that is what we're getting. You know, we've been up here essentially since October 22nd. Right, so that's 2 weeks at least. And if you go back to something like the Russell, for example, and look at it, you know, the Russell's been up here definitely for 2 weeks, and you're actually testing highs back from August 2nd, right? So you're testing almost 4 weeks of price if you take highs all the way back. But essentially 2 weeks at least minimum, right? And like in the case of the Russell, even if you're just counting from, say, this bar, October 17th, you know, you've essentially got 3 weeks there. So 2 to 3 weeks sideways. When you make a big move, you're going to do one of two things, right? You're going to, at some point, that move is going to exhaust itself, and you're going to either correct in terms of price, which is typically the case, or in terms of time, or both. And so far, this one really is correcting in terms of time, mostly, not price. I want to call your attention maybe to something else that would reflect what I'm trying to say, and that is if you look at the major sectors today, you had one green, the XLP, you had one break even, and then the rest of them were all red. Right? So your major sectors basically red, and then you flip over and you look at your indexes. And this really is the story of what's going on in this market right now. Your indexes were down 0.25%. Russell was down 0.4. You actually were up on the index and the composite, and the industrials were almost flat, 20 points down. This market will not sell off. Every time it attempts to sell off, what we see is the sellers just walk away when we get to those critical points where a decision is going to be made. Right? Think about price coming into an area where buyers should show up. Think about the sellers on the flip side of that. Each time, and I'll bring up the NDX again to show it today, each time we come down to that area, and I'm looking at this area, let me actually bring up my marker. I'm looking at, hang on just a second while it comes up, and if I can get it up here, hopefully. Well, maybe not. Anyway, what I wanted to show, I can do it with a different screen. We'll put up the index here, and we'll show it this way. Each time we come into this area, right, that price zone, and I'll pull it in closer, you can see it close. Each time we come down here, 1, 2, 3, 4, every time we come into this area, sellers walk off. And it's not as if, you know, like a bunch of buyers come in there, because if you look at the volumes, we're not getting that. But the buyers are greater than the sellers at that price point. You can't break down. And that's happened multiple times. And definitely it's been most visible here in the NDX. Let me pull up you know, the next thought, which is this is the range now. I mean, that range is not big. Essentially, you can take the width of the 1025 bar. That's your range. You know, yeah, there's a little slop on both sides, but that's basically the range. So you're talking about on the NDX, you're talking about 3368.5 up to 3400. So you got about a 31.5 point range that it's been trading in now for 8 days. And essentially, you got up there about 10, 11 days ago. That consolidation, that sideways move, it's beginning, as it stretches out here, it's beginning to set up the stage for the next move. And that next move is either going to be down or up, which it always is the case. And what's happening is that you're seeing stops start to collect underneath and start to collect over. And you just know that, from a trading perspective, that's what happens. Once one side breaks over the other, you're going to get a fast move. If you come back, that fast move is going to come into what is gap support down here in this area. And if you pull it back a little bit farther and look at it, you actually have a retest regenerate zone back in this area that never has been tested. So if it does break to the downside, that retraces into this area and then back into this area potentially. In other words, you'll get support here, you'll have support down there. Now, if you go the other way, folks, there's nothing to stop it from continuing on. I mean, they're really, projection-wise and so forth, there's an ABCD structure in place, right? This thing can move on. Now, as we consolidate, and the fact that we're in a bullish trend, and we're in bullish across all time frames, almost all sectors, all the markets, the indexes. And that's true not only here on the indexes, but around the world for the most part. Consolidations in bullish markets, you have to stay bullish. Yeah, you can trade for the downside, but at some point you have to say, okay, they can't break it down. And it isn't worth the trade anymore. And if you haven't reached that point yet, after 8 bars, you're pretty close. 7, 8 bars, that's plenty of bars. You need to get a break one way or the other. If you're playing one side that is the opposite of the trend, you can't sit there too much longer because you're going to get hurt, right? Or at least the risk of getting hurt is a lot greater. And so when I suggest that, that's the situation that we have here, all I'm saying is don't be blinded to the fact, or you're biased that, oh, we've gone up forever, we've got to come back. Well, yeah, at some point we will. But until the price action tells us that, until we see something definitive, right, that gives us that confirmation of our expectation, you've got to stay with the trend. And there's nothing here tonight, and the reason I'm spending my time on this is because there's really nothing in these charts tonight that tell you anything different. There's nothing here on the NDX telling you going to break down. Matter of fact, the fact that we went down, tested, and did not break down again, right? Volume didn't pick up much. It says we're probably going to go test the other side again, try to break out the other side. Let me flip through the indexes. I know there's some questions. We'll go to those. Dow Jones, same sort of thing, big long tail. That suggests they try to go higher. Go back to the SPX and look at it. SPX also tests to the downside, right? That range that it's starting to build out. Can't break it down. The only one that's been giving us any kind of signal is the Russell. The Russell actually traded down and is back out of these big bars that we talked about last night. 104.15. We closed at 103.59, so we're back underneath that bar. That's a negative. We're also back underneath this bar from October 18th. So the Russell is the only one that continues to say, yes, we can trade lower. The rest of them, no. And as I just showed you, all the sectors traded down, yet you almost got no bleed on the indexes. We are seeing stock after stock, especially the high flyers, getting taken to the woodshed. Tonight it was Tesla. The other day it was, I don't know, there's been a number of them. There was a bunch of, if you remember back, there was a bunch of chip stocks that got taken. It didn't even phase the index, right? I mean, the sector stayed up there, has continued to stay up there. Today it was the PMI. Market was down. Germany Europe, weak, coming off the top, down about 1% in the CACs. We started down 10, 12 points, lasted for, not very long, and then we flipped around, went back the other way. And if you look intraday, you can see I've got the NDX up, but we can see it here as well. Matter of fact, the NDX was the one that was unwilling to come lower today. The index trades down, and then it was just up all day long until the end, sold off a little bit. That was true as well in the SPX. Looks almost the same. There was a little bit of divergence. SPX actually started up higher, came down harder, but then came all the way back up and actually closed the gap. And that was true on the Dow and so forth. Market doesn't want to sell off, and when the market doesn't want to sell off, you just got to respect it. This week, earnings are about done. We're still getting, the laggards coming out here at the end. You're still seeing some of them pop. If you look at earnings in general, they're mixed. I saw a number today, 84% of forward guidance was lowered in the calls. 84%. That was about what we saw the last time around. But this market just chugged higher since the last time around too. You're coming into the end of the year. You're in that bullish part of the year. What's going to stop it, right? It's going to take something outside of, either the Fed actually has to say they're going to taper, right? That would stop it. Or you really get some economic news that is even beyond the Fed stopping it, right? So in other words, you get some wide, well, let's take GDP. Let's say that you get a GDP that's like 0. That would cause some selling. Or you get a GDP that's 5%. That would cause some selling. Anything in between, no worry. The Fed's going to bail us out, right? That's the way people are looking at it. So unless you get something on one end or the other that's extreme, the economics isn't going to stop it. So what's going to stop it? It's going to have to be a blow up overseas. It's going to have to be the Fed tapering, which it just doesn't look like it's going to happen, which is, of course, what everybody's betting. It's going to have to be something major, and right now, I can't find anything major, and I keep seeing this market tell me that it isn't going to sell off unless something major happens. At least not yet, right? It's going to buy time, just like you're seeing here with time going sideways in terms of price correction, or in terms of the market correction versus price. And that's what we continue to see. Let me go over and let's flip through the sectors together real quick, see if there's anything there. I don't think we're going to see much. I haven't flipped through these yet. Let's start with the transports and work our way down. So our strongest ones have been the transports. Sideways move, really nothing there. The semis actually tried to trade down today, and I think they flipped around. Yeah, they did. Left a little tail there, no volume. So they came into this bar, tested into it. Can't get in it, right? Flips around. This thing's going to try to go up tomorrow. XLB, we had oil down, we had gold down, we had most of the commodities down today. XLB comes in, still doing a retest into this regen area, still doesn't want to give it up. XLE, ExxonMobil's been the hero here. It's been holding this thing up. Did come down a little bit today, but nothing major. XLF, this guy was the only one selling down hard today. And let's see, could it get under it? We got 2065, no, excuse me, the low was 2051. We traded to 2049, closed at 52. So we test the bottom, tested the support, tested into this bar, still can't give it up. Familiar story, right? XLI, the strongest index or sector lately. One of the strongest ones, still hanging at the highs. Nothing there. XLK, you can't get a sell-off with Apple, Google, and Microsoft all hanging at the highs, and that's what they continue to do. Still nothing there. XLP was the one we saw that actually was up today. People rotating back into this, and with good measure. It did breakouts on multiple time frames and trying to work higher. I suspect this one will go back to the highs here at some point, and it looks like it's going to try to work its way back that way now. XLU, it can't go anywhere. That one's worthless. XLV, let's see. XLV, so a little doji, just hanging. The same sort of thing. 3 weeks. Looks like the Russell. And actually hasn't even corrected compared to Russell. Straight across. And XLY, absolutely nothing, right? None of the sectors look like they want to give it up. You got, the only one that looks weak is XLF. And XLE is questionable. I'm going to go to the Ox markets. Okay, so on these guys, let me see here. Can't seem to get it to redraw. There we go. UUP. Alright, so it tested into the top, it looks like 2177. It did. No volume. This one's going to pull back again. It's still trying to pull back. I think it's going to pull back into that support area still. Couldn't get anything going today. So this is actually, if you want to be bullish, and if you look at the rest of the week, the big numbers are ECB, BOE Thursday morning, bank decisions, right? The expectation, the reason the dollar made the run was the expectation is the ECB is going to loosen policy, and the bet there is that it's going to lower rates. Will it or will it not? I don't know. There was talk of QE, but I don't think that has a prayer. If anything, they'll lower the rates. They're not going to QE yet. So that's what's happening there. Then you got GDP numbers. Then you got the employment numbers on Friday. Today you had the ISM. It was actually stronger. That was quote unquote the reason the market turned supposedly. But the reason the market turned is there's no sellers. I mean, I don't. The technicals make the news most of the time, not the other way around. I mean, there are times news leads, but that's not on numbers usually. Those numbers are usually sniffed out ahead of time. So I believe that one's going to try to pull back. Let me look at the FXE and see if it's doing the opposite. So it tested lower, and it's actually underneath, no volume. So FXE is actually weaker, and it looks like it's finally broke here. So that's going to be a trend transition back to sideways. And a lot of times that marks, a bounce area when you finally get your transition. Gold and silver. Gold was down again today, not that much, but some. I expect gold's going to try to bounce if the euro bounces. It's just that I don't think it's playable because I don't think it's going to go very far. The real bar that's controlling everything, as we've talked about, is over here, the 719 bar. At the bottom of that bar is probably a place to look at it. Top of the bar is probably a place to get rid of it. Silver looks probably the same. I think it's been a little bit weaker of late. Let's see what it looks like. I also saw another number out today where, as these gold companies report, a lot of them report what their cost is to mine. And I'm seeing cost structures of about $1,100 to $1,200 an ounce just to bring it to the market. And so we're trading at those price points that's really break even for those companies. So unless gold goes up, you're either going to have to see some consolidation, or potentially if it goes down, you have to see some mines shut because it won't be profitable to mine them anymore, which in commodities is how things straighten out. So if you're producing too much of something, you'll quit if you can't make money. Silver actually went over. It could get a little bounce, nothing big. And let me see junk bonds. I've been watching the bonds to see if they give us any indication. A little bit more selling today. Okay, so we're coming into the swing point high finally, which is a retest regen. That's got 4.4 on it. We're doing 2.6. So there certainly isn't a huge swell of volume as we come back into this bar. And so that appears as if it's going to retest and regenerate higher again. Let's see if the bonds, just the U.S. Treasuries, the 20-year Shearson-Lehman, they don't even call it the Shearson-Lehman anymore, just 20-year Treasury. Okay, so that one sold down hard today and it got into the big bar. 105.55. Wow. So it broke support. You're going to see support draw off the swing point low tonight and probably this bar. That's a 104.39, 105, 104.27. That's where that's the place to look at it hard. And that's going to be halfway into the big bar though. So it's this is going to be interesting. So that you're going to have support here at the swing point low. If you break that, you're going to come all the way deep, all the way back to the bottom, which actually is the ideal spot to buy, right? Because you'll have a support zone here and you have the one up here. That's the two places they'll draw. And so, you know, it's going to be a question of which one holds. Okay, so as rates are coming back, or rates are going up, and the bonds are coming down, that's interesting. because the worst thing for the market would be rates really start to rise, and this market really, not the market, but the economy still not taking off. Rising rates in an economy that's not really chugging along is not a good sign, right? I mean, what is the Fed going to do if they can't control these rates? I guess you do QE4, right? Why should I say what is the Fed going to do? Hell, they just QE to infinity, I guess. So let me look one more time here. Municipal bonds, see what they did. And I saw oil was down good today. We were trading oil, so municipals coming down with some volume in that retest regen. That one would be more interesting. They're weaker than the other one. We had a ABCD structure bearish on the way down here. We've been riding this. Actually, we rode it down from here to there, got the bounce, and then rode it again. This was a nice trade. You know, it was setting up. There's way too much oil, given the economic structure that's in place. And, this thing has hung up here forever and tested here. When it finally got the break, it was time to jump it. Got a nice big push down, fairly large. If you're playing SCO, it was a nice trade. That trade we took off today and made some decent money on it. Now we'll wait on the bounce and see what it looks like. But oil looks like it will bounce from here. Let's go to some of your questions. I actually have one that's sent to me. Let me take that one first because otherwise I will forget. So let me pop in here. It had to do with Veil. And let me see, looking to go long Veil when it retraces. So let's see what Veil looks like. Veil. So this is a mining company. If I remember right, they're big on the iron ore for the steel industry. And okay, so yesterday it breaks out suspect. Retraces in, does the retest regen today and holds. And it has less volume than the breakout bar and the bar it was breaking. Now notice the bar it was breaking had high volume, right? 37 million shares. You do 25 into it. What does that do? Well, it causes an immediate retrace retest. That retest comes down into support, bounces back up, gets back over that breakout bar's low, and holds. That's a good sign. That's a good scenario. I think it's going to continue to work here, but if you get a clean break, if you trade back over yesterday's highs, I think that's not a bad place to be looking at it. Because if you pull it over and you look at the weekly as well, what you're going to see there, this is the swing point high it's dealing with on a weekly basis. That's 1689. We're trading at 1686, as high as 1709. If you get back over that and you can stay over that, you can run to the next one, and that's a nice big push to 1855. So you can see, it's not a bad setup. You just got to make sure you're going to get over that bar and stay over it. So just let it get up there, let it test. If you can close up there over these highs as we get to the end of the week, which is just 2 days away, that would be a decent setup because you'd have a swing point break on the short-term time frame and on the intermediate, and that's a good sign. Okay, let's go to some of the questions here on the boards. Jim says, hello, could you look at TPI? All right, TPI is Tinian Pharmaceuticals. They have earnings on November 11th. So this one is bullish. Yeah, I don't know. I hate to step into these kinds of things. When I'm looking at pharmaceutical, I'm assuming this is, they have Fed approvals, um, and you have to look. You got to look at their pipeline and see when their FDA approvals are going to be reviewed and all those kinds of things. This made a nice run up. It actually showed a reversal at the high, right? It's peeled back from it. I just wouldn't play this sort of a stock in front of earnings. I just think it's too dangerous. If you do, you got to play with smaller money. If you play with smaller money, then what's the point? Unless you're just trying to get an initial entry so that you can add to it. But I don't. The chart doesn't look bad. I'll pull these out the weeklies as we talk about them. The chart doesn't look bad, but it's just hard to play these things. If I were going to trade it, I would make it trade back into these two lows, right here at the lows. That way you don't have to risk much, and force it to trade under them, right, to stop you out. But the thing I dislike about these types of stocks is you can wake up the next morning and it's gapped down 10% and there's nothing you can do. There is overnight risk in the market even with stops. So that's the part you have to be careful about. So if you're going to play with this thing, do your homework. Make sure that you don't have anything FDA coming up, any kind of conference coming up that would actually usually help, not hurt. But especially the FDA's can hurt you. And then with earnings coming, I think you just have to wait on it. I'm running out of time here. Let me try to flip through these. Hi, LA. I'm looking to getting interested in gold because of a few new items that are coming up. ECB rate announcement, the employment report that should affect it. It was hit by the ISM this morning, but held its yesterday's low. Look back, most of its losses. Semis, it seems like 1300 futures is holding. Comments. I like gold, but I think you're just a little bit early. I think you could get a bounce here. I said that as I started the show. I think you could get a bounce here, but I don't think it's going to go anywhere. The dollar doesn't look like it's going to give it up. Is the ECB going to lower rates a little bit? The dollar seems to think that, and if so, that's probably going to hurt the FXE is probably going to hurt this contract. So I'd give it a little bit more time and try to get it as close as possible to the bottom of that 718 bar. Let's see here. So yeah, and it did close below the swing point low. Looking for a long-term, multi-year investment and thinking of WFM, not right now, but at a good point in the next few months. What do you think of it? Whole Foods is, it's a great stock. It's in kind of a mega trend. That whole sector is a good sector. There's another stock that came out. If somebody could find the symbol, I'll look at it with you, and it's called Sprouts. Sprouts bought out actually a good friend of mine. Him and his brother started up Sprouts not that long ago, and they eventually sold. Not Sprouts. They started up. What was it called? I forgot the name of it. Sprouts bought them out about 6 months ago. And then Sprouts went IPO, and they had a huge spurt. I suspect they'd come back. I need to go back and look at that stock again. But that's another one that you could look at. So if I pull this out and look at the monthly, you're going to have to look at monthlies here to try to figure out a spot. Swing point high is 46.38 is the low, 50.93 is the high. There hadn't been any volume in this thing forever. Way back at 44 was the last time you saw volume, and we don't even see 44 on this chart. So I would, one of the great things about the neoclassical charts is they tell you what your risk looks like. You've got minor support up here, minor support there, right? Not great support anywhere here. You do, if you go back to your weekly, you can see it here, right? 51.86. So you can see, you're trading at 62, 63, almost 63 and a half. your risk is back to, you can't even put a stop in until you get back to like $50 or so. So I'd probably use this bar, 48.47, into that. That's a long way down. That's the kind of risk you're taking. There's no volume up here as it keeps going higher. You just can't buy anything like this. Yeah, it's a great stock. Let it come back. And it's going to come back 10, 15 bucks when it finally does. You just have to wait. Let me see. Earnings tomorrow, I see. Anyway, long term. Yeah, I think you just have to wait on them. SFM evidently is the Sprouts. Thanks so much, Fred, for looking that up for me. Let me take a quick look at that before I end the show here, because I've been meaning to get back to this and I forgot about it until you just mentioned it. So now let me, while I'm here on the show, we'll look at it together and see what it looks like. SFM. Yeah, so they had their, so if I pull over their monthly, so they do their IPO here, 36 was the low, and you can see the kind of move it made. And yeah, it had volume as it broke. Tested here with more volume. It's going to come back into that area, 42.11. So you have to give this time and let it come back. But 42.11 is a good place to think about it. This may be, I like new stocks that have the potential to become big stocks. I happen to know this one because of my friends and their dealings with it, in that no confidential information, but I know how the stock, the company was structured and what kind of returns they were making internally, and I don't expect those are going to change much given what I know. So I kind of like this stock. I'm going to have to keep watching. I got to put it on my watch list. Hey folks, thanks a lot. I appreciate you being there. You tell a friend, tell two. Until next time, I'm L.A. Little. This is and was the Daily TA Wrap. Have yourself a great night, and tomorrow I'll catch you again. We'll do it one more time. We're going to have a shake-up on Thursday. That's the day. Take care, folks. Good night.